Hey everybody, this is Jim at SP500chart.com. It's about 4:40 on the 5th of August 2013. We're going to take a look, see what happened here on this Monday. And before we do, I just need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I'll just remind you again, I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. We're looking at a 15-minute chart, and to put it in a nutshell, today we went sideways. The trading range for the entire day was only about 5 points. We had a low. Let me get my little tool here. We had a low at about 1703 and a high at 1709, so maybe about 6 points, but just a really narrow range. The good news is this is the third day now we've closed over 1700. Each day that happens tends to lend a little bit of credence to the idea that we belong here, that this isn't a fluke. The other thing that happened today is that we were, for the most part, in the upper range of the last 2.9 days of trading. I say that because I'm not really counting this long candle right here. I'm saying once we got over 1700, we have been down to just a little bit over 1700 and as high as 1709. And we closed today at 1707 and change. So we were kind of in the upper range of this. Now, normally you might think, well, if we're in the upper range of a trading range, then we would think maybe we would see a down day tomorrow. But I don't think so, and here's why. Because, as I mentioned over the weekend, it sure would be nice if we could start to get some hint of a channel or something developing in the chart that gives us a little clue as to what may be going on. And this is all I can really, for right now, come up with. And we've seen this kind of thing before, where a bottom is put in, and then there's a breakout, and then the market, after that breakout, there is then some kind of channel established. Now, this is a very narrow channel. It's only about 6.5, 7 points tall. That means it cannot last for long. Well, I mean, theoretically it could last forever, but it's not going to, because eventually something's going to happen that's probably going to kick the S&P down out of this, more than likely to the downside, but possibly even to the upside. But this is all we've got for right now. Kind of interesting to note, if we extend this line right here back down through this pattern, you can see that almost all of the action was underneath this line for about a week and a half. A week and a half of a day. 5.5 days. I think that's kind of interesting. And now that we broke out over 1700, now, at least for the past 3 days, all of the action has been above this line. Now, let me remind you that when you have a resistance line that is rising and you break up over it, usually you don't expect to stay necessarily above that line for very long, because that line typically does not really turn into support. Okay, but I think I want to for this particular situation not get too locked into that idea, because we did have a breakout, and breakouts often establish a new trend channel. So let's just see how long this guy lives. Just one more thing, that when I say this guy, let's see how long this channel can be maintained going forward into the rest of this week. One thing I want to show you, just kind of, that's interesting, if we get a parallel line and then we look at the pitch of this channel, you'll see it matches up almost exactly to the pitch of our really long-lasting trend line that started back in the mid of November and lasted all the way through May. We had a trend line situation here that, with the exception of this one break to the downside, lasted for 1, 2, 3, 4, 5, 6 plus months. This little tiny channel that I just pointed out right here is at the same pitch as this. So that tells me something that I think could be significant, and that is this is a manageable rate of ascent. So if the S&P wants to keep going up, this isn't like we're just this. In other words, this doesn't look anything like the kind of ascent you would see in a blow-off top, a climax top, or something like that. This is nothing like what we saw in silver when was that, 2 years back or whenever it was, when there was this move from like the mid-30s up to 50 that took place in just a few days. No, this looks like, hey, we got over 1700, now let's continue the move upwards. It looks pretty controlled. Let's see going forward how much life there is to this small, narrow channel. So guys, 3 days now closing over 1700. I think that's significant. No sign yet of any top, and we've got a potential target up here of about 1722 from the depth of this little pattern, and then we've got that other pattern that we've talked about where we have a larger dip here that we never got our right shoulder. But it sure looks to me like this market wants to keep going up. And if this had completed as a inverted head and shoulders pattern, I would have no hesitation calling for a target of about 1755. Because we don't have that right shoulder, I'm a little less confident. But let's keep that in mind just the same, because that seems to be, for this move, a reasonable target and could very well happen. Again, gosh, wouldn't it have been nice to have had that completed pattern down underneath us so that I could make that kind of a call with 80 or 85%, I don't want to say accuracy, but 80 to 85% confidence. Right now, I don't think I'm quite there on it, but the market sure looks like it wants to go there just the same. So there's your video for August 5th, 2013. If you're asking yourself, well, Jim, where would you get concerned? Well, at this point, I would get concerned if we take out this this purple line right here that's currently around 1680. So if you're looking for where to worry, maybe that, because that has lasted for about about 3+ weeks. That seems to be a fairly reliable support line, and it also adds up with another trend line that has its origin back from a consolidation pattern that we were in early July and also through June. So it looks like we've got some trend line support around 1680, that if that were to break, then that would seem to tell us that we would be looking for the 1650s. But right now, we're above all that. So I'm thinking, let's see how long this little narrow channel can last, and let's see if we make that 1722 target, which I think is very reasonable. And then let's see if we can even get up to that 1755 target, which I say with a little asterisk by it, because we don't have the benefit of that nicely completed pattern. Instead, we've got kind of a a one-armed inverted head and shoulders, but it's still, I think that may be a reasonable call. Just not with that 80-85% confidence. So there's your video for August 5th, 2013. Thanks for watching. Thank you for your support. Take care.